Hey everyone, welcome back. Another frustrating day in the market. But I guess when you're looking at long term, the short term fluctuations are going to be the part and parcel of the game. I have been putting a little bit of money into the market. Namely, I am trying to add on to my Facebook or Meta position. I've also looked at increasing my VOO or the S&P 500 ETF. Add that to my portfolio holding as well. I'm at about 37 shares of the VOO ETF, but I want to get it to 100. I have definitely realized that that's where most of my money needs to be, and then everything else needs to come around it. It's very difficult to sort of beat the market. I knew about it before I started it. I had definitely read about the Warren Buffett challenge, but you know what? You only learn it when you do it, and I think I've learned my lesson. So I want to grow my VOO holding, to 100. So that's going to be about $40,000 in today's prices, around $41,000 if I'm not mistaken. So that's going to take some time. And another one that I'm looking to add to is Facebook or Meta, to about 25 shares. I'm at 11 shares. I think that company has promise, when you look at the metaverse. And I also think that at least in current times, that's one tech stock that's backed by earnings. The others either have no revenue or have no earnings. But I think Meta might be a good play as far as long-term tech position is concerned. However, as I've been putting the money in the market, it seems like a big ocean that just eats everything up. And I've been like, feels like I'm losing money every single day. But you know what, as I mentioned, this is going to be the part and parcel of the game. I am going to stay in for the long run. And one thing that I looked at, and I think that's going to help me, keep perspective of the market, is going to be, what my portfolio has done in the long run. So as of today, my portfolio stands at $233,000. If I look at it from its highs, that was on November 5th, 2021, my portfolio would have been $260,000. That's about 12% difference if nothing had gone wrong. Starting this day, there were bad news events one after the other. On November 5, around that time, Elon Musk decided to hold his online poll of selling his shares. That happened. So he sold a bunch of shares in Tesla, and Tesla is my biggest position. About 35% of my holdings is Tesla. That hurt me. And then as we went into December, we actually got into the Omicron scare. That hurt everybody. And as we came out of the Omicron scare, in the sense that that's not such a bad, debilitating virus and so on and so forth, we ran into Jay Powell, who said, he's going to retire the word transitory from his dictionary as far as inflation is concerned. So that has obviously been a tough go. News about inflation, news about rate hikes, uncertainty about rate hikes. How many rate hikes are we going to get? What time are we going to get? And how much will the rate hikes are going to be? So I think that's all going to be an uncertainty till we hit the end of Q1, and definitely possibly into Q2, because that's when we'll know what amount of inflation have we been able to curtail because of supply chain issues, labor issues, and what does Fed think in terms of raising the interest rates. I think the picture is going to be very clear. At this point in time, I really feel that the market has no idea what the interest rates are going to do. And therefore, you get days like today where at least my portfolio was down 2%. Obviously, the market, which is VOO, was down about 1.85%. But then again, as I mentioned, when Tesla does well, my portfolio does well. When Tesla does bad, my portfolio does bad. So Tesla was down 2.3%. And that's where we ended, minus 2% for the day. So as I mentioned, I'm in this for the long run. Again, I'm not a financial expert. I do not know what I'm doing is absolutely right or wrong, but I'm doing a trial and error and sort of documenting what I find as far as what works for me out in these videos, and trying to make a series out of it as to what the maybe later down the road I'm going to watch these videos and be happy if it turns out the way I've said, or if it doesn't, maybe I'll have a laugh. But one thing that I found was that helps to keep things in perspective. If you really think about it, when we were going through the COVID scare and the market started to drop like crazy, that was on February 21, 2020. From February 21, 2020 to March 20, 2020, that means about a month, the market dropped quite a bit. My portfolio was up about $8,900 and it was down $13,200. At that time, the amount of money that I'd invested in the market was not very big. And up until this time, I thought I knew everything about the market, and my misconception was clear. Or, by the time we ended that downfall, I was down quite a bit and I realized I do not know anything. However, one thing I'm really, really, looking at is when I look at that downturn in context of 2 or 3 years, because that's how long I've been investing, it does not seem as steep. It does not seem as sharp. At the time, it definitely seemed like the bottoms opened up and everything was going to go into that massive pit. But again, it's not been the case. When I look at it in the long run, it just seems like a blip. And I think as this stretches along a little bit more, this will seem more and more like a small blip as far as the markets are concerned. I look at it here when we went into Feb 2021, there was a big downturn in the tech stocks. Again, I went from a portfolio of $210,000 to about $184,000. That was about a $25,000 or so decline, much steeper than at least what we have experienced till date. And you know what? It has started to look not so steep already, although it's still pretty fresh in the memory, and I will not consider it not so steep. But in the long run, it has started to look like another event that happened. And then the market rallied. Obviously, we went up to the point where the Tesla shares were doing crazy because of the Hertz deal and so on and so forth. So I think I like to keep things in context. And the way I like to keep things in context is by looking at, previous downturns. Is this going to be longer than the previous ones? I do not know. I really think so that this is not over by any stretch of imagination. And the route is going to continue even for the next, maybe a month. I do not know. So I'm going to hang on tight. I'm going to sort of, take in as it comes every single day. But I would say that since I'm looking at it 30 years from now, I'm not worried about it right now. Although, if I feel like if this particular downturn has taught me anything, is that, sometimes the hype around certain stocks can really get out of control. For example, Rivian. I really still do not know why Rivian was priced the way it was priced, even though it did not even have a revenue line on the income statement. So one thing I've learned is, even when I look at my growth stocks, I'm going to be a little bit more pragmatic in terms of where I'm putting my money and not go with the hype. I did go with the hype, and I want to actually say that on record out here, that that's one thing I've learned, is to not go with the hype. If a company doesn't have a top line, I don't think that's a company that anybody should be investing in, no matter how beautiful the future story looks like. You know what, at the end of the day, it could be a fairy tale. I will continue to sort of reap the rewards of my dividends. I'll continue to invest in dividend stocks, and I'll continue to still go on with my journey of investing in growth portfolio or growth stocks. But here's where I am at $233,000. The portfolio is still up about 71%, which is great. But I have a feeling that it's going to look much different by the time we start to go back up again. And I really hope that that time comes again. Again, guys, this is not a financial advice. This is just me documenting what I'm doing with the market and just putting out here certain learnings that I've gotten as far as wealth building is concerned through investing and through reinvesting the money and saving the money that I make in my day job and reinvesting my dividends and staying the course, and not getting panicked by what's happening in the short term. So anyways, I really hope to see you in the next video. And I'm really hoping that it's going to be a better story than what it is today. But you know what? I am not holding my breath for it. Hopefully, we are going to be in a better place soon. But if you are on the journey of wealth building and long-term investing, just tough it out. I think we are going to be really, really better off in the long run. Take care. Bye-bye.